Good afternoon, everyone, and thank you for being here today. So I'm proud to present Breaking Barriers, Empowering Newcomers with Open Banking in Canada. So just a few housekeeping items before we get started here. Throughout the presentation today, it'll last about 50 to 60 minutes in duration. There's a Q&A at the bottom. Feel free to type your questions as we go, but all questions will be addressed at the end of the presentation. So the purpose of today's workshop is to learn about the financial system in Canada and the challenges that newcomers face in various sectors, such as housing, insurance, and banking. We will introduce you to the concept of open banking and discuss how it is currently being utilized globally. Last, we will discuss how now is the perfect time to disrupt the financial system in Canada and how open banking can be the solution to help newcomers access the products and services they need to be successful. I have with me today multiple industry experts. So I have Tyler Adams from Blackline Property Management. Tyler is the head of operations at Blackline, a third-party property management company based out of Waterloo, Ontario. Prior to this role, Tyler spent time in leasing and mortgages, where he saw firsthand the need for better tools to help screen newcomers equitably. Nigel from Neo Financial. Nigel is a former founder, entrepreneur, and innovative strategist. Nigel leads the corporate development and strategy at Neo Financial. In his current role, Nigel is responsible for identifying new markets and opportunities to rapidly grow the impact and footprint of Neo and its financial services offerings here in Canada. And last but not least, I have Eric Lapointe from Single Key. So Eric is a seasoned entrepreneur with extensive knowledge in commercialization. He started his career in hospitality and began his entrepreneurship journey during his MBA at the Ivy Business School. He is now a part of the leadership team at Single Key, where he is responsible for new commercialization strategies and growth. So we're going to start by talking about the Canadian financial sector. So we're going to touch on, the Canadian financial system is a crucial aspect of our country's economy to begin with. It provides Canadians with access to tools and resources necessary for financial stability and growth. However, the current financial system in Canada is not without its flaws, particularly for newcomers. There are significant issues that affect the ability of newcomers to access the products and services they need upon arrival in Canada. For the purpose of today's discussion, we will focus on accessibility, discrimination and bias, as well as affordability, which are the three main barriers to entry that newcomers experience when trying to secure basic financial needs. The good news is, today's discussion will also explore potential solutions to these issues, highlighting the need for a more inclusive and equitable financial system for all Canadians, regardless of their tenure here in the country. So let's start by talking about accessibility. The lack of accessibility in the Canadian financial system is a major flaw that affects not only newcomers, but also many Canadians, particularly those living in remote areas or low-income households. For those living in low-income households, they experience many problems, such as not having the financial resources to meet minimum balance requirements or to pay fees associated with certain financial products, such as bank accounts, credit cards, and bank drafts. Additionally, barriers might include lack of financial literacy, meaning these individuals have limited knowledge about the financial products and services that are available to them, making it difficult to make informed decisions about managing their money. Lack of and/or poor credit history, which can make it difficult for them to access credit cards and loans. Lack of identification, which means they may not have necessary identification documents required to open a bank account or to access other financial services. And lastly, physical presence. Many financial institutions require this, which can be a challenge for those living in rural areas or small towns with limited access to bank branches. Discrimination and bias are significant flaws that affects the Canadian financial system, particularly for newcomers. Discrimination can take many forms, including higher fees, lower credit limits, or outright denial of financial services. A few examples of this are auto insurance and credit cards. Oftentimes, newcomers' driving records from their home country are not recognized by insurance providers here in Canada, so they are forced to pay 2 to 3 times higher premiums. When it comes to credit cards, newcomers are often approved for secured cards, meaning they have to put up collateral in the form of cash or securities in order to be approved, or they are approved for much lower unsecured credit limits. This is due to a lack of established credit history here in Canada. Some financial institutions may discriminate against newcomers based on their country of origin, race, or socioeconomic status. An example of discrimination by financial institutions could be a scenario where a person who has recently immigrated to Canada applies for a loan at a bank. Despite having a good credit score and stable income in their home country, the bank denies the loan application solely because the individual's country of origin and the fact that they have no established credit history here in Canada. The bank may assume that the person is a high-risk borrower due to their lack of credit history in Canada, even though the individual has no prior history of defaulting on loans or credit payments in the home country or Canada. This is an example of discrimination based on a person's country of origin or immigration status, which can have a negative impact on their financial stability and opportunities here domestically. This can be especially problematic for those who have recently immigrated to Canada and are trying to establish themselves in a new country. This is a prime example of the chicken and the egg problem, very similar to trying to secure your first job, where employers are looking for work experience and you're looking for your first job so that you can build that work experience. Addressing these flaws requires a multifaceted approach, including policy changes, increased financial education, and cultural sensitivity training for financial institutions. By addressing these flaws, Canada can create a more inclusive and equitable financial system that benefits all Canadians, including newcomers. So we touched on a few of these, in regards to affordability, we touched on a couple of these features in the accessibility component, but I wanted to dive a little deeper and showcase an example of exactly what I mean, specifically about not having the resources available to meet the minimum balance requirements. What you're seeing now is an example of how it can be, is an example of how expensive it can be to hold a bank account in Canada. This image highlights 3 separate tiers of checking accounts that are offered by a financial institution here. As you can see, the more usage and the benefits that are included, the higher the monthly fee and the higher the minimum balance requirement in order to waive that monthly fee. In addition, in an environment where the cost of living is at an all-time high here in Canada, 54% of Canadians say they are now living paycheck to paycheck as the cost of living crisis continues to squeeze budgets, which means there's a very high probability that those individuals will not have the funds to maintain a monthly minimum balance of, say, $3,000 or $5,000. So what this essentially means is that with each one of these accounts, based on the tier that you have, if you maintain a minimum account balance of $3,000 at close of business day every day for the entire month, they will waive that checking account fee for you, so on and so forth with the unlimited account and the all-inclusive account where the minimum balance requirements are $4,000 and $5,000 respectively. Now, the bright side of this is that we're starting to see multiple players emerge in the market, primarily challenger banks and neobanks that are offering free checking accounts, unlimited transactions, and no minimum balance requirements. However, neobanks or challenger banks also come with their challenges, such as limited product offering, lack of physical presence, and reliance upon technology. I know Nigel from Neo Financial is excited to be here today and to explain how they are making banking more accessible for all Canadians, regardless of tenure. Newcomers to Canada face several challenges when it comes to finding adequate housing, securing insurance, and accessing banking products and services. These challenges can be particularly daunting for those who are unfamiliar with the Canadian financial system and its requirements. Here are some common difficulties that newcomers might experience after relocating to Canada. Housing. When it comes to rental applications, newcomers might face difficulty in providing the necessary documentation required to complete rental applications, such as credit history, rental history, employment information, as well as domestic references. They have limited options. There's limited rental availability in certain cities. High rental costs and language barriers can also make finding suitable housing challenging. Canada is currently facing a supply shortage. When it comes to rental housing, vacancy rates are less than 2% across the country, which fosters a highly competitive environment. Newcomers are also forced to compete at a disadvantage against multiple domestic applicants with Canadian credit history, references, employment income, etc. Lastly, and unfortunately, discrimination. Some newcomers may experience discrimination when seeking rental accommodations due to their ethnicity, race, or religion. When it comes to insurance, newcomers struggle due to a lack of Canadian insurance history. Newcomers most likely will not have any Canadian insurance history, which can result in higher premiums or difficulty in obtaining certain types of insurance. Language barriers. The language barriers can make it challenging to understand the coverage offered by insurance policies, and difficulty in getting coverage. Newcomers may have difficulty getting coverage for certain types of insurance, such as auto insurance, due to their lack of Canadian driving experience. On the banking front, they face challenges such as limited credit history. Having recently arrived in the country, newcomers haven't had the time to develop Canadian credit history, which is the backbone of our financial system. By not having established credit history here in Canada, it can make accessing bank services such as loans or credit cards extremely difficult. Sometimes they have difficulty opening an account. Newcomers can also face challenges in opening a bank account due to a lack of Canadian identification or proof of address. Limited access to financial resources and information. Newcomers may also be unaware of financial resources that are available to them, such as low interest loans or government programs. Overall, newcomers face several challenges when it comes to housing, insurance, and banking. These challenges can be particularly daunting for those who are unfamiliar with the Canadian system and its requirements. However, with patience, perseverance, and the right support, newcomers can successfully navigate these challenges and settle into their new lives in Canada. So now we're going to talk a little bit about open banking. So what is it? How does it work? And how is it currently being utilized globally? After we discuss open banking, we're going to talk about how it's being utilized to help newcomers access the products and services they need here in Canada. So, what is open banking? Open banking is a system in which banks and financial institutions allow third-party providers to access their customers' financial data through application programming interfaces. I know what you're thinking. It sounds very simple. Open banking allows customers to securely share their information with other banks, financial institutions, or third-party providers, such as budgeting apps or investment services. Open banking aims to promote innovation and competition in the financial sector by allowing customers to access a wider range of services, products, and financial advice. It also enables customers to compare financial products more easily and switch between providers more efficiently, as their financial data can be shared across institutions. Open banking is regulated and governed by national authorities, such as the Financial Conduct Authority in the UK and the Office of the Superintendent of Financial Institutions in Canada. These authorities set standards for data protection, security, and privacy to ensure that customers' financial information is protected. Overall, open banking has the potential to transform the financial industry by giving customers greater control over their financial data and empowering them to make informed decisions about their finances. Lastly, the transferability of data globally will empower newcomers to remove the starting from scratch-like experience when coming to Canada. You now have the power to bring your data with you in the form of a risk profile, almost like a financial passport, which helps to provide financial stability and creditworthiness to Canadian service providers. Utilize the data you've spent years building and utilize the data you've spent years in your home country building. So let's talk about how open banking works now. So open banking works by allowing banks and financial institutions to share their customers' financial information with third-party providers through secure digital channels known as APIs. The customer has control over their data and can choose which third-party providers they want to share their data with. When a customer consents to share their data with a third-party provider, the bank or financial institution securely shares the customer's data with a third-party provider through an API. This data might include information such as account balances, transaction histories, and spending patterns. The third-party provider can then use this data to offer the customer a range of customized services, such as budgeting apps, investment advice, or loan products. Overall, open banking aims to promote innovation, and competition in the financial industry by enabling customers to access a wider range of financial services, products, and advice. By allowing customers to share their data with third-party providers, open banking gives customers more control over their financial information and the ability to make more informed decisions about their finances. So now I wanted to showcase a couple examples as to what third-party providers look like. So on the left-hand side of the screen here, you're seeing an example of a risk profile in which would be utilized for an individual that's relocating internationally. So for example, Rose relocated from Brazil, in which she uploaded her financial data to Vambora from Brazil. So when she gets to Canada, she can leverage that data to showcase her financial stability, to showcase her creditworthiness by showing her income confirmations in the home country, her proof of funds, her savings that she's developed, her debt exposure, what her monthly obligations look like for any debt facilities that she has outstanding. She's also able to do her identity verification, so she is able to prove that she is who she says she is, as well as she's not on any fraud detection lists as well. So it confirms that the service provider here domestically knows they're dealing with the person who they say they are, and they also are able to assess their financial stability and their creditworthiness through the data they've built in the home country, and in this case, it's Brazil. On the right-hand side, you're seeing an example of a personal financial management application here in Canada. So this application enables consumers to amalgamate their banking in one place. So on average, they say that Canadians bank in around 3 institutions per person. So if you have an application in which you can pull all of your banking into one place, it helps you to give a snapshot view as to your financial health in a holistic view where you can see everything in one place and better manage your finances. So those are 2 examples of open banking third-party providers that are available. So now we're going to talk a little bit about open banking. We're going to travel around the world and look at a few different use cases here. So we're going to start in Australia with insurance. So Australia had open banking. It was officially launched in July of 2020 with 4 major banks. So Commonwealth Bank, Westpac, ANZ, and National Australia Bank, which means those institutions are required to share their data with accredited third parties. By February 2022, there were over 300 financial institutions that were accredited to access open banking data in Australia. In Australia, insurance providers are utilizing open banking to make underwriting decisions by accessing bank data through APIs to better assess the risk of potential policyholders. Open banking allows for the sharing of financial information between banks and other financial institutions with the consent of the customer, which is known as consumer permissioned data. By integrating with open banking APIs, insurance providers can retrieve data such as account transactions, savings patterns, and payment history, which can give them a more complete picture of an applicant's financial situation. This information can then be used to determine the applicant's ability to pay premiums and make more informed decisions about underwriting. In Brazil, on February 1st of 2021, the Brazilian financial industry launched open banking, marking the beginning of a new era in data sharing. In the initial phase, over 2 million Brazilians shared their credit history and personal information with more than 2,400 participating financial institutions. According to Accenture's survey, 74% of Brazilian consumers are willing to share their financial information to access personalized and relevant financial services. Open banking is transforming the underwriting process for potential borrowers in Brazil. By using APIs to access bank data and account data, financial institutions are now better able to evaluate an individual's creditworthiness. With open banking, customers can share their financial information between banks and other financial institutions, giving lenders a more complete picture of their financial situation. And lastly, we're going to look at housing in the UK. So in 2018, the UK officially launched open banking, aiming to increase competition and innovation in the financial sector. Today, over 300 regulated entities are enrolled in open banking, with more than 3 million active users accessing open banking-enabled products and services. According to a recent report by Allied Market Research, the UK's open banking market is expected to grow at an annual compound growth rate of 24.4% between 2021 and 2028, reaching a market size of almost $5 billion by 2028. In the UK, property management companies are now utilizing open banking to streamline their tenant screening and underwriting process. By using APIs to access bank data, these companies can now make informed decisions on potential tenants. Through integration with open banking APIs, property management companies can retrieve information such as bank account transactions, payments, and bank balances. This data can provide a comprehensive overview of a tenant's financial situation, allowing for better assessment of their ability to pay rent and other bills on time, as well as evaluating their creditworthiness. The use of open banking in the tenant screening process is more efficient, faster, and more secure than traditional methods such as credit checks, which can be unreliable, expensive, and time-consuming. With open banking data updated real time, property management companies can make quicker and more informed decisions on potential tenants. So you're probably all wondering what is happening with open banking in Canada and how does this affect me? Well, open banking in Canada is on the horizon with an anticipated formal rollout coming in 2023. With that being said, open banking is already starting to be utilized here domestically, especially for newcomers, since they're able to provide open banking data from their origin country if open banking is in effect there, which makes it much easier for them to present their creditworthiness to service providers here in Canada. To date, the Government of Canada has updated the public via phase announcements. So for phase one, the Government of Canada's review of open banking was released, and this happened in early 2020, which proposed that the industry and government collaborate to develop a framework that would enable safe introduction of open banking in Canada based on stakeholder consultations and learnings from other jurisdictions. In phase two, involves further stakeholder consultations on a proposed open banking framework for Canada, including the Financial Consumer Agencies of Canada's advice on designing the framework to best ensure consumer protection, which led to the committee delivering its findings in a final report to the Minister of Finance in April of 2021. The report provided the minister with recommendations on implementing a secure open banking framework in Canada. In phase three, which began in March of 2022, with the appointment of Abraham Tashian to lead the development of an open banking framework in Canada with a mandate to consult the industry, regulators, and consumer representatives to design and implement the key elements of an open banking framework. The Canadian government has been exploring the possibility of implementing open banking since 2018. As of now, open banking is not yet regulated in Canada and is not widely available to consumers. With that being said, we are seeing the adoption of open banking directly benefiting new to Canada consumers, as information from global open banking sources has helped to bridge the visibility barriers between new immigrants and service providers here in Canada. We'll discuss this in more depth in the slides to come. The Government of Canada and the Office of the Superintendent of Financial Institutions are responsible for overseeing and regulating the financial industry in Canada. The government and regulators are currently working together to develop a regulatory framework for open banking that protects consumers while encouraging innovation and competition in the financial sector. The Canadian government has expressed its commitment to protecting consumer privacy and data security in the development of the open banking framework. Overall, the Canadian government and regulators are taking a cautious approach to the implementation of open banking, with a focus on ensuring consumer protection and privacy. While the regulatory framework is still under development, there is a growing momentum in the industry to embrace open banking as a means to improve access to financial products and services for newcomers and other underserved communities. So let's talk about how open banking can disrupt the financial system in Canada. For one, open banking can introduce competition and innovation to the financial system in Canada by allowing new players, such as fintechs, to offer financial products and services. Two, open banking can promote transparency and interoperability by providing consumers with greater control over their financial data and enabling them to share it securely with third-party providers. And three, by enabling data-driven insights and customized financial solutions, open banking has the potential to transform the way financial services are delivered in Canada. How open banking will create accessibility for newcomers. So open banking can reduce the barriers faced by newcomers in accessing financial products and services by enabling them to share their financial data from their home country with lenders, insurers, and other financial service providers more easily. For example, when applying for a mortgage, newcomers often face challenges in proving their creditworthiness to lenders. With open banking, newcomers can provide lenders with access to their financial data, including payment histories and other credit related information, to demonstrate their creditworthiness and improve their chances of securing a mortgage. Open banking can also provide a more comprehensive view of their financial situation, which enables service providers to make more informed decisions and offer more suitable products. In this way, open banking can help to promote financial inclusion and empower newcomers with greater access to products and services they need to succeed in Canada. Overall, open banking has the potential to disrupt the current financial system in Canada by introducing competition, promoting transparency, and enabling data-driven insights and customized financial solutions. Additionally, it can create accessibility for newcomers in Canada by reducing the barriers they face in accessing financial products and services, promoting financial inclusion and economic growth. So, I've been talking a lot. I'm going to pass it over to my first industry expert now. My first industry expert is going to talk, first it's Tyler from the housing sector. Tyler's going to talk to us today about the application process, general requirements for an application, current challenges he sees when assessing newcomer lease applications, and the opportunity that open banking presents. So I'll pass it over to you, Tyler.
Thank you. That's 30 minutes is a long time to go effectively on one breath. And yeah, big ups for your stamina there. I'm going to talk about the rental industry primarily, not necessarily mortgages. And we're going to start by discussing how we look at applications traditionally in the existing system. So the three main things we look at when processing lease or rental applications are income, credit score, and rental history. Income is usually in the form of, job letter, pay stub, C4, things like that. Any way to verify income. Credit, standard credit score, Equifax, TransUnion. We're not necessarily looking for a minimum number per se, but consistency of payments is key. And then rental history, at the moment, credit scores don't show that. That needs to be manually verified with landlord checks. Newcomers to Canada do face challenges in all three of these categories, whether they are landed already or looking to come. Starting with income, if they are on their way to or pending arrival, they will not be able to show that in the traditionally accepted methods. Credit score, they will largely not have that either if they're coming from abroad. And rental history, again, it's very difficult to show or follow up. And then we're adding on top of all of that the language barrier, and that makes each one of those categories even harder to go through and properly evaluate. So how does open banking help with all of those things? It's almost hard to believe how wonderfully equitable it makes it almost right away. It solves so many of these problems with one system. Starting with the traditional credit score. Well, what are we looking for in credit score? We're looking for, consistent, not missing any payments. And with open banking, we can do that. We can see exactly what they've paid, the consistency of that. Have they missed anything? And how much are they carrying versus their income? On that, we can also see their income, right? One of the things we look for is, do they make what they say they make, where they say they make it? And with open banking, we can see all of those things. It's very transparent, and it's verifiable, and that's phenomenal. Rental history, again, this is something that traditionally is difficult for domestic applicants. We would have to make that actual call, and I don't know about anyone else in this industry. It's often difficult to do rental history checks internationally. Again, and you're adding the language barrier on top of that, making it even harder. With open banking, we are able to see that they have paid their rent on time every month, and more than that, exactly on the day of. Is it a couple days late here, is a couple days late there? Those little details matter, and we want to be able to give new Canadians the best chance they possibly can. Mark was talking about discrimination, and I'm sure it's unintentional a lot of the time, but it's a serious thing where new Canadians are not being given the same chance as everybody else through no fault of anybody's but the system. And with open banking, the playing field is able to be leveled very quickly, and we're giving everybody the tools to do the most thorough job that they can. I kind of rushed through all my notes on that one.
That's all right. Well, thank you very much. I appreciate the insight from the side of property management companies. I know it's been a changing landscape over the last few years as we continuously see more and more newcomers arrive in the country, and our supply tends to be on the moving in the opposite direction. So we want to make sure that everyone has a fair chance here in the country. I know that was one of the biggest things that jumped out to you when you started to kind of work with open banking and incorporating that in part of your process there. But yeah, I think it's very, very important to make sure that everybody has an equal chance here when they come to Canada. So from there, I'm going to pass it over to Nigel from Neo Financial. So I know I plugged Nigel a little earlier on in the presentation, so I'm excited to kind of hear what he's got to share with us today. So Nigel's going to be talking about the steps that Neo is taking to ensure banking is more accessible for new Canadians and how they can support you in your relocation process as well.
Did it. This is great. Glad put this together, and absolutely open banking is going to be so critical to the future of banking in Canada. So along those lines, so I work for Neo Financial, and at Neo what we're calling reimagining banking in Canada. And a huge part of that equation is innovating on how newcomers get set up with the financial services they need before they arrive in their new home country. As it stands today, a few of the big 5 banks enable newcomers to start the process of creating the financial products they need pre-arrival. This would include things like a bank account and a credit card. However, while you can create these products, they don't actually have the systems and processes in place to be able to activate them until the newcomer arrives in Canada. And not only that, once the newcomer comes to Canada, they then have to go in person to a branch to activate the product. So this really limits the value of the products to newcomers because they can't use them to set up the other essentials they need. So, like Tyler just discussed with setting up renting, can you have those products in place before you arrive to set that up? And then, of course, once you do arrive, you're reliant on cash until you can get to a local bank branch. And at least the newcomers I've spoken to, nobody really wants to touch down in a new country where you don't really know where everything is with, $9,999 in their pocket. So enter Neo. This is, a problem that we really think needs a solution. So Neo is uniquely positioned to tackle the challenge of putting functional financial service products in the hands of newcomers before they arrive in Canada because of the distinct fashion in which our technology was designed. So unlike traditional banks where everything has to funnel through what's called a banking ledger, which is highly regulated, Neo has 2 ledgers. So we have a banking ledger and then a tech ledger that sits on top. And this is really powered by this whole the constructs of open banking. And because of this sophisticated construct, we can enable individuals to create, activate, and use the financial products they need before they get here. So with Neo, a newcomer can create an account, fund it, and access it via prepaid MasterCard, all while still in their home country. And they can then use this MasterCard to set up their telecommunications, rent, utilities, etc. So not to mention, when they get off the plane and take the first step of their Canadian journey, they can have that penultimate Canadian moment where they walk straight over to Tim Hortons, pay for a coffee with their card before they leave the airport. So why does this matter? I mean, that's simple. It makes the newcomer journey easier, friendlier, quite frankly, safer and better. And that's what we're doing at Neo. So thanks, Mark, for having me today. And I'm excited to talk about this exciting new product suite that we're bringing to market.
Absolutely. I appreciate the input there. And that's, I don't know if there's a more formal stamp of approval than a cup of Tim Hortons coffee when you get to Canada to solidify your new home.
Exactly.
So yeah, thanks so much, Nigel. And now I wanted to pass it over to Eric from Single Key. So Eric's going to be discussing a very unique product that they actually have available, how that's making housing more accessible for newcomers, especially first generation immigrants with no network here in Canada. So thank you very much, Eric, and it's all yours, man.
Awesome. Well, thank you. Thank you for having me. This is great. Great opportunity to talk to you all. Essentially, we kind of at Single Key, our whole role here is to help mitigate a lot of the risk for landlords and tenants and newcomers. We kind of tackle a bit upon some stuff that Tyler said and Nigel, in the sense that, you know, Tyler did a good job explaining what needs to be done, how open banking helps. When we come in is we kind of add a little extra. So we've seen the newcomers here when they come in, given no credit score, a lot of missing information that's usually North American focused, and landlords tend to discount. And to offset some of the risk of not having this information, landlords tend to ask for deposits or 6 months worth of rent right away, which makes it a lot harder for newcomers to come in. So there's a lot of barriers for newcomers to come in when landlords do accept some of that risk, right? And so what Single Key does is, with open banking, which is going to be paramount, all we need is a few pieces of information from newcomers, and that would be no bankruptcies, and we just want to verify some of the income that you have and the amount of the lease, so we can have a nice ratio. And what Single Key does is we actually become your guarantor. It's called a tenant passport, and it's for people who come in who know they don't have that information when they come to the country. Given open banking, we can approve them, we can issue them a tenant passport. And what that does is that when you then go and find your rental units or property managers like Tyler, you can actually say, listen, I do have a guarantor here in the country that now eliminates a lot of the risk for the decision making of having you and giving you the appropriate housing. And so that's something that's very important to us. It's part of our current program called the Rent Guarantee Program, which is on top of the tenant passport. And what we do is we further eliminate some of the risk for the landlords by guaranteeing that should something happen with payments in the future, we would help cover a lot of that for the tenant. And so all of this is just to say, Single Key, once you come in with open banking, if we issue you a tenant passport, we are there to help you find the place, and we'll help you get guaranteed, eliminate all the risk, and let the landlords know that they have nothing to fear, nothing to worry about by issuing this. And our goal here is to make it a lot easier for newcomers to find appropriate housing in the country. And so I don't want to take too much of your time, but here at Single Key, that's what we do. We want to eliminate the risk for everyone, and especially make it easier for people to find appropriate housing. So thanks, Mark, for having me.
Absolutely awesome. Thanks so much, Eric. I think that's such a great product that you guys have there. I know that it's not something that just newcomers potentially have a need for, but there's even domestic usage for it as well, like for individuals that maybe work in the I'm just thinking off the top of my head, but maybe people that work in the restaurant business that earn a lot in tips, and on paper their income doesn't show a whole lot, but they know that they can pay for a certain apartment, which would often require a guarantor to sign for them. So it's neat to see the flexibility in the offering there, and especially how it's helping newcomers with their relocation.
Absolutely.
So that is all for today. So I know that I had some polls scheduled that I cruised right through with my 30-minute spiel there. So if they wanted to put the polls out to today's audience, that would be greatly appreciated, and we can get some responses there, and then we can open it up for the Q&A as well. Very interesting. Have a very diverse group here today. It looks like close to 70% of people experienced difficulty for reasons in which we had expected, credit references being the two primary issues there, as well as a mixed bag for people that have understanding about open banking. So I know there was a couple more polls if you want to release those last two now, and then we can open it up to the Q&A. Got to unmute myself before I talk here. So then just reviewing some of the polls, and it's very interesting to see that, again, close to 70% of today's audience relocated to the country. from a country that doesn't have a traditional credit rating system in place. So when you come to a country like Canada, where a credit system is really the backbone of our financial system, it's screaming the need for adoption when it comes to underwriting practices, because the amount of global mobility of people moving in different locations all around the world, it's not apples to apples. However, their needs are apples to apples. When they live in a house in one country, they're going to need a house in the other country, whereas they're moving from a country with a credit rating system and going to one that doesn't, or vice versa. There's always issues when it comes to underwriting those individuals for the products and services that they need once they get there. So very interesting, and I appreciate you guys taking part in the polls today. So we'll open it up for Q&A now. I know I've kind of answered a few of the questions that have come up throughout today's presentation, but we do have one more. I'm curious to know if open banking is accessible for those who have language barriers. Could you share your thoughts on this? I'm curious to know if open banking is accessible for those who have language barriers. Yes, open banking isn't language dependent. It's really just based off of a few factors would come into play there. So is there open banking in the country in which you're coming from? So this one is a bit of an interesting situation, because there's countries like Brazil, UK, Australia that all have open banking frameworks implemented, which means the government has released a regulatory framework as to how it operates in the country. Whereas you have countries like Canada and the US, which actually haven't adopted or implemented any open banking frameworks yet. However, there's still providers here that can provide that same type of solution, in which they connect individually with the institutions and enable consumers to share their information from those institutions. So when it comes to language barriers being an impediment for open banking, it's not going to play a factor on that, no matter where you come from. As long as there's a plugin for you to access the data via an open banking provider in your home country, then you'll be able to access open banking there. So, for example, in Canada and the States, there's providers like Plaid and Flinks. In Latin America, there's Belvo. In Southeast Asia, there's Finverse. So there's a multiple different players out there, and those individual players have relationships directly with the institutions. So long story short, if you have a provider in your country that has those relationships with the institution and is able to offer that open banking product, then you'll be able to access that. So language won't actually play a factor there. Okay, so another question's come in. So open banking involves banks sharing and being transparent about customer information. How does this requirement align with the competition between banks, particularly in terms of attracting customers with competitive products and customer service? So I can put my 2 cents on this, and I'd love to kind of know Nigel's contribution as well. So in regards to the banks competing, I'm going to circle back to how information is exchanged. So in the case of open banking, anytime financial data is shared on behalf of a customer, it has to be approved or approved essentially by the customer, which is called consumer permission data. So if I were to go into Neo Financial and I wanted to open an account there, and they needed my information, and I currently deal with another institution here in Canada, I would grant permission for Neo to have access to that information, in which it would force the other institution to share that information with Neo, so that they could do whatever it is that I have come to them requested. So maybe open an account for me or do a credit application for me. I've given them all my information from the other institution. So when it comes to the competition between banks, particularly in terms of attracting customers, I don't see that playing a role, but maybe Nigel wants to add some more on top of that.
Yeah, no, Mark, you're exactly right. So really, like the way we want to think about it is that it's two different buckets. So like the personal information tied to the client is owned by the client, and it's like your individual information, and then the banks kind of have access to that if you grant it to them, and they don't have any kind of impact on that data other than like reporting on things like credit and do you pay your bills and what type of loans have you taken out, et cetera. So they're reporting on products that you're accessing and how you use those, and then that is assigned to your profile. So there's the competition perspective there is no impact. Like what you do individually impacts your profile, and then the banks are effectively looking at that profile and making a decision on if the risk of working with you as a client is worth it. And if it is, then how can we craft products or give you, put things together in a way that is more appealing to you than it is than what some other bank can offer you. So that's more where the competition piece comes in. And that's why you'll see like, some of the banks will give you a toaster when you sign up because some people really want a toaster versus, at Neo, we're really focused on providing free services because we think that's important. So yeah, that's the two things. Client data over here, it's its own bucket, and then banks over here when you give access to that data.
Love it. And the only other thing that I wanted to comment on there was just in regards to the actual competitive products. You made a note about the competitive products. So I showcased another application earlier in today's presentation on the right here, which is a personal financial management tool. So when you amalgamate banking in one place and you share your information with a third-party provider like this, or even if your institution starts to incorporate that. So let's say, for example, Neo Financial, their banking application, they enable you to pull in other banks' information that you have out there so that you can kind of see all of your finances in one place. If Neo had access to all that information, or in this case, if this Billy app has access to all of your banking information in one place, then they would be able to map out your spending, see what your credit, see what kind of balances you're carrying on your credit facilities, and potentially make recommendations that are customized specifically for you based on your financial history. So if you're constantly carrying a high balance on your credit card, they might make a recommendation to you to say, hey, you should explore this debt consolidation loan at Neo Financial, which has a great rate. So they could make recommendations for you based off of seeing your banking in a holistic view. Whereas right now it's all siloed. So if you bank at TD or if you bank at Bank of Nova Scotia and you go in there, they only know the information that you have there. So any accounts that you have with them, the information pertaining to those, but they don't know any of your banking anywhere else to know how to properly make customized recommendations for you because they don't see that full financial picture unless you outright share it with them. So that's the kind of improvements that open banking is going to facilitate. It'll enable consumers to have a better grasp of their financial picture and make more informed decisions, hopefully leveraging recommendations that are made by third-party providers or banking apps from institutions here in Canada that are able to incorporate all of one's information. So I hope that was helpful. Is there any other questions out there, or did anybody else from our presenters panel want to comment on that one? Okay. All right, well, I'm going to leave it. We got another question coming in here. Excellent presentation, everyone. Thank you for sharing your insights. I'm interested to know if you are aware of any challenges that other countries have faced during the implementation of open banking. Could this information be useful in addressing potential obstacles in Canada's adoption of open banking? Well, that's a great question. I don't know off the top of my head challenges that other countries have faced. I'm sure there's been issues at the at the forefront of every issue, I'm sure it's consumer privacy. Whenever you're implementing an open banking framework like this, that is always the most important fact, is to make sure that consumers are protected and their information is safe. So I'm assuming those are probably the largest issues that have been had to be overcome by countries when they're introducing their open banking framework. And I know that's exactly what Canada is experiencing right now, and that's what's taking a little bit longer than expected for us to do a rollout, is to make sure that consumers are protected at all costs. And I know, sorry not to pick on you again, Nigel, but I think Nigel might have something to add on this one, just because he knows how important it is with consumer privacy at banks to make sure that information is protected. And but yeah, I definitely would agree that this information would be helpful in addressing obstacles for us doing an implementation of open banking here domestically.
Mark, you're exactly right. The consumer privacy is certainly paramount in this. I think the one really nice thing that Canada has going for it in this circumstance is that Australia has gone through the process and kind of learned a lot of the pain points and addressed them and come up with a really effective system. So we can mimic, as you said at the start of this whole presentation, the Canadian government's appointed different people to lead this through, and they have a lot of great frameworks around the world to use as examples. So hopefully everything gets launched here as soon as possible.
Yeah, I think you're right. We've got a nice amount of guinea pigs here that have kind of set the stage for us, so we just can kind of go in and avoid some of their challenges, and hopefully this will be implemented. Although I did write that component of the presentation today saying that we had plans to implement a formal rollout of open banking in 2023, but I did hear that open banking wasn't mentioned in the budget, which is a very bad sign. So it could be 2024, which we see open banking introduced in Canada. So just wanted to be clear on that for everyone. So going to leave this open for about another 30 seconds or so to see if there's any other questions that come in. If not, we'll give you guys some time back, and we'll wrap up today's presentation. Well, it doesn't look like there's any other questions coming in now. So yeah, we'll wrap up there. I'd like to thank everybody else, or thank everybody for coming out today and joining us for today's presentation. I'd especially like to thank my partners in crime here, Nigel, Eric, Tyler. Thank you very much for taking the time out of your day to come and join me here and share your industry insight. I know it's very valuable for today's audience. And feel free to reach out to us if you guys have any questions, or just want to pick our brains a little bit more. I know there's also been some products here discussed as well, so if you have any interest in learning more about those, you're more than welcome to reach out to today's panel. I haven't listed, actually all of our information is available on the Pathways to Prosperity website. So if you're looking for contact information, that would be the best place to go. But other than that, have a great rest of your day, and we look forward to chatting with you soon.